What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief, the show that I do Monday through Friday, 5 days a week. We use technical analysis to get a good sense as to where the market might be headed next. And not only do we use technical analysis, we also add another dimension known as intramarket analysis. So we look at multiple different asset classes, stocks, mainly the indices. Then we look at bonds, we look at the dollar, currencies, and also commodities. And then we also go over a lot of different stock market signals that I use and indicators. In today's show, I'm going to show you big picture charts. This is to help us get a better idea as to where we actually stand as far as the current price action goes in the stock market. And yes, that is a picture of me and my pup Coco. It sums up our relationship right there. Let's go ahead and get into it. Oh, hey, what's up? Welcome back. All right, let's look at some big picture charts. I'm going to start with the S&P 500. We're looking at monthly time frame right here. First off, just pay attention to where the price action is. All the way up here at a level of resistance that was once support. So this line trends back to between 2002 and 2003. So you can see a support once it cracked down, it really flushed down, and then we're acting as a resistance here in 2018, resistance again in 2020, and now we're checking again here. It seems like we're just right above it, but when you look at the monthly candle, it has a little bit of an upper wick, so some could say that we might be starting to see more of a blow-off type top, but just pay attention to where the price action stands. This can help you really understand and determine is a stock that you might be investing into, or are you putting your money in at the right time? Should you be waiting for consolidation? Or, is it the best time to go long right here? This is not predictions, but what I do need to just point out is just how overextended the recent move was in 2020 from the March bottom and just where we're currently standing. But that's not it, okay? You've probably seen this chart. Look at the IWM, the Russell 2000. Small caps, they've been on a relentless tear. Where are they right now? Well, dating back from 2001, we could look at this resistance where it acted as resistance there in 2007, right here in mid-2018, and now we're right back up here in 2020. We have the price, the PPO, the price percentage oscillator down here. We're looking at a 10-period moving average, and you can just see the very, very far overextension where you look back to the left and you never see it that high before. So very aggressive move. Will it continue? It might. But what you really need to pay attention to is just where we stand right now in the grand scheme of things. That's not it. Let's keep going. The Dow Jones Industrial Average. This is the weekly time frame, but I'm going to show you some other monthly time frames here. We've been tracking this rising wedge. You can potentially, if we get a gap down into next week or even next year, that could mean this is an island reversal type pattern. So we've been kind of coiling up tighter and tighter right here. It looks like a mini ascending, rising wedge. And then also we have this resistance that acted as support in 2019. You can see touch. When we crack down below it, it acted as resistance, and now we've really been respecting that resistance line. So, what could potentially happen here? Well, we have to see either a break above to see a very, very potentially sharp even increase in price, or if we start seeing a break below, we might come test the lower portion of this trend line or even this gap. So we're going to have to be mindful of this rising wedge pattern here. This is the DJW, this is the Dow Jones Global Index. I want you to pay attention to these blue dashed lines. This is on the monthly time frame as well. Big picture stuff, okay? What do you know about this up channel? Well, first off, it acts as resistance, support, resistance, support, resistance, support. We came up here that actually acted as resistance here from a different trend line. You can see that acted as resistance in early 2000, and then also here on the 2007-2008 financial crisis, and then we started breaking above that, and now we're tagging the upper portion of this channel again. So are we going to get rejected? Well, maybe, but we might not. Now, I also want to point out a couple other things. One, the monthly time frame is extended above the upper Bollinger Band, and when things get really overextended, we can see pullbacks and retracements. Not only that, look how far we are from the 5 EMA, where the 5 EMA is at 453, and the current price action right now is at 485, so we're 35 points above it, just about. So, and then on top of that, you look at this current candle that's forming. The month's not over yet, but you can see how it's kind of a shooting star formation. So we got to be very mindful that, hey, This is the global index, and we're coming up to a big area of resistance right here. We're overextended, and we don't have the greatest looking candle. And then we have the price percentage oscillator down here as well on the 10-period moving average. And you can just see it's at this overextended point. And sometimes when we reach those areas, you can see the red lines here. 3 times you saw some pretty big aggressive moves to the downside once it started crossing back below 10. So that's the Dow Jones global index. Now let's look at transports. If you're familiar with Dow theory, we're taking a look at transports and industrials. This is very interesting. So where's the price action? Well, we have this gravestone doji type candle that's currently forming, or a shooting star, inverted hammer, whatever you want to call it. It's a bearish type candle, but it always needs confirmation. So don't just think that it's going to fall apart just by one candle. Sometimes things could take 5 or 6 months trending sideways and then potentially fall or potentially burst up. Markets, you got to understand, they don't just move vertical in nature. They need to see corrections. It's healthy to have corrections, and it's healthy to consolidate. If the market continues ramping straight up in the air, typically what that means is there's more volatility to come sooner than later. Now, this rising wedge is pretty huge. I mean, we're dating back to the 97. So we rejected here, rejected here, rejected here, rejected here, and now we're going again, testing it for, what is it, 1, 2, 3, 4 times since 1997 or 1998 basically. And then we have the 2009 low, and then we also have the 2020 low here. We have those connected because it's somewhat forming a rising wedge pattern. Doesn't mean that it's going to come back down to this range on the transports, but we need to be mindful where the current price action is. If we start seeing the transports roll over, you can pretty much assume that the Dow Jones industrials are going to go with it. Let's look at one more, the NYSE. Okay, this is a big, broad composite index. And what we got going on here is, once again, look at where we stand on the chart. An area of resistance, we have negative divergence, and it's dating back over here to 2007, 2008 financial crisis. That was the resistance here, resistance here, resistance here. Is it going to act as resistance right here, or are we going to get some crazy squeeze, overextension, blow off top? Well, I can already tell you this. We've already seen a very, very aggressive move to the upside. And think of a rubber band. When rubber bands get stretched out really, really tight, you pretty much just see them snap back fairly aggressively. Now, we can't time the market and know when that's going to be taking place, but we need to be aware that, hey, the NYSE broad index, I did an analysis on multiple stocks within the NYSE, and today I talked about, what was it? It was Square, and that thing has just been on a monster tear. Now, if the NYSE starts rolling itself over, you can probably assume that Square and various other stocks within that broad index are going to follow suit. All right, so that's the big picture thinking that I want you to see. Let's look quickly into the indices themselves on the daily time frames, see if we can pull anything else out. Then we're going to get into some indicators, kind of move quicker throughout the rest of this episode. Daily time frame. Overall, the market didn't really do anything today. We're still in the potential possibility of seeing a Santa Claus rally into the year's end. So don't rule that off the table. You can see that we had this hammer type candle. And today we had a little bit of a down day. Really, honestly, it's just a bunch of chop. We're still within this channel. Let's wait till further notice if we start breaking down from it or breaking above it. Now, on the 30-minute time frame, we're kind of forming a bull flag right here. So we pulled down. Now we're kind of channeling, and we're still in this channel. So if we break out of this, we might have a little bit of resistance at the gap, maybe retouch it, but then we're still set up to potentially tag that our original target, which was 3750 to 3760, 70, 80, right around in that zone. There's a complete possibility still. So we have to be mindful, that the market's not just going to fold right here. It could, but we got to take note of what's currently going on. And then this bull flag, by the way, you can also just notice this, but you have a left shoulder, kind of a head, and then that's kind of forming a potential right shoulder. So if we break above this bull flag line, that could also be considered a neckline, which would target us close to this pink box up here, right around 3750. So be very mindful of that. I want to take a second right here and just realize, everybody, if they like these type of shows and they want to watch it, to subscribe and smash that like button. I'm just a normal guy. That's me, Michael. And that's my pup, Coco. We do these videos together. I typically have the video on, but lately I just haven't been putting it on because it does take a little bit longer to upload. But we appreciate this. And just so you guys know, we've been recording videos since December 31st of 2019. That was my first video that I put on. It was, I believe, a trading video, daily trading video, which I plan on bringing back next year. And yeah, we're, in 1 year, we almost reached 40,000 subscribers. So thank you for everybody for your loyalty and support and just interaction and engagement. It's really awesome seeing all of that. So just, yeah, thank you a lot. Let's go into the Dow Jones. Dow Jones, daily time frame. We already talked about this rising wedge. This is what I only want to point out here is this could be very temporary, but the price action did close below the 20-period moving average and below this trend line. So like I said, and then we have the MACD kind of sloping down too, still above zero though. So maybe this might be the start of something bigger. There's still a lot of support down in this area. We have the lower Bollinger Band, we have these gaps. But, this is how things, this is how market tops are made. Market tops aren't made by, smart money selling. It's made by an exhaustion of buyers. And from the grand scheme of things, I mean, a lot of people are bullish and we'll be getting still into here. But once everyone makes their trades and once everyone's in and then there's no more new buyers coming in, things can get a little toppy. And really since, November, we've just been tracking sideways here. So, we gotta just be very mindful and careful. And that's why I wanted to show you those big picture starts. Let's look at Russell 2000. I'm only going to show you the 2-hour time frame. Look at this. We had a gap down, broke through the rising wedge, and literally just went completely vertical right back up to almost an all-time market high. I was hoping to see an all-time market high into close. We didn't quite get it, but it was, we're talking cents away. And if it does get a market high tomorrow, we'd be doing so on a negative divergence. Still is technically a negative divergence here. So, maybe we continue this ramp up higher into 200. It's very possible. If the Santa Claus rally wants to continue, just note just how impeccable this rising wedge is, and we broke down from it already. And we still have buyers that kind of step in. I got to remove that gap because that gap was actually filled. So just be mindful of all of this. I think the high today was what? The high today was 197.72. So we're very close to running up to the $200 marker there. NASDAQ 100 daily time frame, very interesting price action today. We're up $27, but we basically opened up and closed exactly where we opened. So doji candle looks like a little tiny hanging man right there. We're above the 5 EMA, and we're kind of creating this rising wedge pattern. You can look down here at the money flow index, negative divergence. It's been in this little symmetrical triangle pattern, the money flow index, and you can chart the money flow and various other indicators too. It's just interesting because we broke out of the symmetrical triangle and we're seeing continuing making new highs, but the money flow isn't supporting those highs right now. So if we continue seeing drifting down, this could be just showing us, moves that are going higher and higher, but it's doing relatively on weaker strength. All right, let's get into the indicators now. This is some interesting stuff. First off, we broke out of the falling wedge, and we're kind of creating this kind of curvature type pattern here on the VIX. Maybe this continues, or like I said on the previous market brief, maybe we drift down a little bit for the Santa Claus rally and then continue our spike to the upside. I still find it very interesting as we're making these market highs, we still have not filled this gap since February. It's absolutely incredible. And, we did have some big volatility step in the other day. Today, not so much, but we're still floating at a decent level, okay? Where do we close at? We close at 24.23. I had an original target of 27.50 from this little tiny falling wedge breakout, and we hit it, we tagged it, so that made sense. Maybe there's still more to come. RSI is still above 50, so be mindful of that. Here's something that kind of supports the Santa Claus rally, the Pring Bottom Fisher. We crossed above it today, so the blue line crossed above the 10-period moving average. That is technically a quote-unquote a market bottom. This helps find market bottoms, but really it's only good at finding them when it's below -10 or even below this green line down here. That helps a little bit more, find overextensions to the downside. But what I wanted to do was I just wanted to point out, okay, the last 2 times that it crossed above when it was a higher reading than -10, this one and this one, what happened shortly after? Well, we had this monster short squeeze to the upside. That was that August rally into September. And then we also had right here in June, this huge squeeze to the upside, and that was obviously that June squeeze. Now, both times that happened, the market entirely corrected those gigantic moves rather quickly. So be mindful of that. This really doesn't mean anything. It doesn't predict anything. So don't hold this as your ammunition right here to go long. Yes, we might get a short squeeze and it might follow suit of the last 2 times, but just take everything into consideration. Now, if this does count as a short squeeze above, that would make sense from the perspective of those long-term charts that we showed, because if we get this crossed over and we start seeing a short squeeze, well, what's the other charts showing? Well, we're breaking above an area of resistance, and when we break above resistance, you typically get momentum buyers coming in, which can project the price even further. And on top of all of that, if you have people that are shorting the market and they are forced to cover because the price action goes above that resistance, you have even more buyers that have to cover. So that could really shoot the market and squeeze it higher. So, something to think of. Now, on the monthly time frame, this is the CPCE, just full bullish here. I've shown you this chart plenty of times. We're up printing 0.37. That means the market is completely bullish, and when sentiment is extremely bullish, we need to be somewhat cautious because volatility does increase during these times, as you can see. Each time I marked it, and you can see some volatility increases there. I don't have the VIX showing right here, but you can see the pullbacks within about in a 5-month time frame there. Now we got the CPC, smooth over 10 period moving average. Look at, we were moving up to the red line. We saw a little tiny downtick today. And if you look at the purple shaded line, that is actually the real CPC that's not smooth. And you see a sharp move to the downside. So even more bullish sentiment. Maybe we get one more rip lower and then maybe project higher. We'll see, but that's a pretty low print for a day. You can see it happened just around here in June too as well. And what happened in June? Well, we kind of rolled over. So very, 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 very bullish sentiment right now. A lot of people probably believe in the Santa Claus rally. Maybe it'll come, but these are all kind of warning signs to me as of right now. Then you mix breadth into everything. Breadth, minus 31, not the greatest. Market's kind of floating around up around the all-time highs still, and breadth is kind of, dying slowly right here. You can see how we hit a market highs right here, and then the breadth started continuing dying out. So got to be mindful of that and watch that. Let's look at some sentiment stuff. We're looking at the AAII for the bulls, and then also we have the ratio and then the bears down here. Look at, we're starting to see it kind of downtick a little bit more. So everyone was full bullish over here. This huge uptick in sentiment reached an all-time high. When we look back, it was like that happened in 2018, early 2018, and we got this pullback. And then what do you know? Like we had new highs, negative divergence. The same thing happened in 2018. Then you look at the ratio, same thing. We got overextended above the 2. That's pretty high reading. Negative divergence, market kept on going higher. Maybe this is all signaling something very similar. It's something to consider. The NIM exposure, what are asset managers doing? We're seeing a little bit of a downtick here, but it's still relatively a very bullish reading overall. Then you have the RIDEX below us, very low print number. What's the money doing in the RIDEX? Full bullish right here. So you got to think of this two ways. So yes, everyone's extremely bullish. However, they're also very exposed to downside risk. So if we start seeing something risky happen in the markets, NIM exposure, so asset managers, hedge fund, everybody, retail investors have to start considering, one, should I be buying the dip right here or should I be flipping my positions? And that's when this whole just kind of market momentum can really turn on people. So you got to be very careful there. Then we have the fast stochastic, the NYSE summation index. It's still continuing to roll over. When it gets down to these levels down here, when we get oversold, that's when you start looking for long positions. When it's up here, you want to start looking for not necessarily short positions, but you want to make sure that you're honoring your stop losses and being very careful going long, and maybe reducing risk when it's these high of readings. All right, so quite a few things going on today. Commodities, let's check those out. Look at the CRB. This is on the weekly time frame. We mapped out an area of resistance quite some time ago. We came up in this, tagged this area. Still hasn't crossed above it. Hey, if we start crossing above that, I would expect to see the dollar continue to move down just because they work inverse of one another, typically. So when you see big rises in the CRB, so this is a basket of commodities that's widely tracked, you can see the dollar kind of pull down. And, we saw some weakness today, not much, but we also saw some strength in the dollar. Gold, look at this neckline, got rejected. This was that whole breakout area that we were saying, and we talked yesterday about, well, I don't see why I can't just see a big move to the downside. Down 1250 today, closed right below the 50 period, but we're still above this trend line. Be careful here, because if things want to start, taking a breath, maybe we got to get rid of this current trend line and just start looking at this upper one and then this lower one. We have to put in a higher high. We have to beat this to start considering that this move is going to start breaking out. If we start putting in a lower low, the trend continues in the intermediate term down. Then we have silver. We marked out this area of resistance. Clearly it held. We saw a big down day in silver today, down 84 cents. That's 3.2%. We are still above the 50 and we're still above this breakout point. Potentially it's a breakout, back test, and then move higher. The MACD is kind of curling itself over. So, we got to watch this, be careful here, per usual, but this could also be potentially a cupping pattern. So this could take months to kind of complete itself, or, weeks at a time to kind of complete itself. If we start getting above 30, then I'd say, okay, this thing could really start ripping. And by the way, I didn't bring up the GDXJ chart, but I will be showing and talking more about that soon. It has this just excellent bull flag on the weekly time frame. And I remember going, back in June, I think I posted on Twitter, June 26th, I did a special edition weekly scan video, and that just, all the stocks that I talked about just completely ripped to the upside. And I see that potentially happening here in the very near future, but I'm going to wait for a certain signal in order to do that. Then we got WTIC. This is light crude oil, rejected at 50 so far. Could be potentially consolidating, moving down. We still have the 50 period below us and the 200. We had this little golden cross area right over here, consolidating more, and then finally started breaking out. The higher oil goes, I would imagine that the dollar would also continue to go lower. This is cost push inflation right here. So we'll see if the Fed gets their wish and we get inflation. Now let's look at the dollar. The dollar is pretty prime for a bounce of some sort. Okay, we were pretty oversold readings, and we have this falling wedge pattern. We broke above it once, got denied. Broke above it a second time, still below the 20 period moving average. This looks good so far, but we still have a lot of work to do for the bulls. The MACD still below zero, but it looks like it wants to start crossing above. That could be a bullish crossover, and then we could see maybe if this is a temporary change. Now, what can potentially happen? I would expect that if we break out of this and we get clear this 20, guess where we're going to have resistance? 92. That's where the 50 period is currently, and that's where that breakdown area was. So yeah, maybe we break out of this, then we see some weakness in some various assets, we get some corrections, and then we continue this move lower in the dollar. Or when even looking at the weekly time frame, maybe it's going to be even a bigger move than we'd all anticipate. Maybe the dollar breaks out of this falling wedge completely and just really starts tearing to the upside, which can put just a tremendous pressure on commodities, equities, and just various other aspects. Now let's take a look at bonds. Bonds caught a little bit of a bid today, up 0.39, still not making a higher high, I should say, and it's still putting in lower lows. So, if you look back here from early November, you can say, well, it's actually putting in higher lows. So you could say, no, that's a symmetrical triangle. You can look at it both ways. I would start saying if we start breaking above this upper channel light right here, then you'll start seeing yields head lower, and then we'll play it as time goes. But as I see it right now, let's not read too much into it right at this particular moment, just because of where the current price action is. There's clearly a large short position in bonds, and if they get squeezed out, that could, you can just see a huge pop. So yields right now, the 10-year. Down a little bit today, 1.79, but still floating above 0.9 and still floating below 1.0. And it's still intact. The higher lows are still intact. The higher lows for the 30-year. Clearly, the smaller ones, the 3-month and the 2-year, they're compressed to nothing, and the spread is constantly moving higher. Steepening as well. All right, everybody, that's pretty much all I got for you. Let me just wrap up my thoughts here. Once again, pay very close attention to where the current price action is for the various charts that I showed you on the monthly time frame. We have things running into levels of resistance, but we have extremely bullish sentiment. So this really means a couple of things. One, if the bullish sentiment continues this bullish sentiment and we see this Santa Claus rally, you can see a short squeeze from these areas of resistance. Why would you see that? Well, first off, short people would have to cover, which would bring in buyers to the market. And then on top of that, you would have momentum traders and other people also. And so you can see even stronger of a blow off top. However, sentiment is extremely bullish right now. So when things, from a contrarian point of view, when things are very bullish and everyone's made their bullish trade, that's once again how sometimes market tops are made. It's not by smart money selling, it's by an exhaustion of buyers. So when the buyers are exhausted, we can get those market tops. So be very careful in these environments. Just literally resistance all across the board. And just be mindful of that while you're trading, while you're investing. Because if we do start seeing corrections take place or these gaps that are being filled, it can do so very aggressively, as we've seen in the past. A lot of people tend to forget that in March, let me bring up a weekly time frame, but here in March on the industrials, look at 1, 2, 3, 4 weeks. 4 weeks we moved that big of a move to the downside, and it wiped out pretty much 4 years of gains. So what took us so long to get up to this point was wiped out in just 4 weeks' time. So like I said, be very mindful, be very careful in these current environments. It's just a pretty crazy time in the markets. So yeah, that's all I got for you on today's episode, everybody. Hope everyone has an excellent holiday weekend, and I will see you all later.